Happy New Year, everyone. The markets are closed today, so today's video will be short. I've found a way to hopefully take advantage of the bullish move on spot gold that we missed a week or so ago due to low volume. But stay around to the end to hear my caveat. Hi, this is Tim from TradingStrategyGuides.com. It's New Year's Day in the year 2020. Man, I never thought I'd hear myself saying that. Wasn't it 1977, just a couple of years ago? Okay, it's time for some tough love here, guys. So far, over 1,200 of you watched Monday's video, and I appreciate that. And a few of you commented on various things, good things, and I appreciate that too. But not one single person answered my question about how you were planning on ringing in the new year. I get it. Some of you are introverts that just don't like putting yourselves out there. That's okay. I'm like that too. But all 1,200 of you? I don't think so. Here's the tough love part of this. If you're not listening to something as simple as my asking you to comment about your plans, then maybe you're also not listening to the important trading details I'm telling you. I know many of you want to be full-time professional traders, and I know that anyone that wants to do that badly enough can do it. But you've got to listen to the things I'm telling you. I think you can do much better. So comment below on how you rang in the new year last night. For my part, I spent some time with friends and went home and was asleep by midnight. What can I say? I'm old. As I mentioned Monday, I would be careful trading for the rest of the week and even early next week. By the end of next week, everything should be back to normal, whatever normal is these days. Today I'm going to show you a setup to get us into this bullish gold move, but there will be a warning with the trade idea, so don't miss that. First thing we'll look at open trades, then later on the trading maxim for the day. Happy New Year! Remember to click the subscribe button and hit the bell so you won't miss any awesome trade opportunities. Let's look at the open trades. The US dollar Mexican peso weekly setup is one of the reasons why I don't like weekly setups. They're pretty slow about hitting targets, but patience is the order of the day, right? Still waiting for this one. The Euro Swissy hit a new low yesterday, so that's good. The first half has been closed with profit at the first target. The stop loss on the second half is at break even, and I'll be moving it with the parabolic SAR as soon as it gets down there below this break even level. I brought this pound CAD MA cross setup to your attention a couple of weeks ago, and it triggered yesterday right here at 172.27-ish. on 95% volume, so I'm in this half size. My stop loss on this is 170.14. My take profit is 173.69. Since the market is closed right now, it's probably not too late to get into this if you get your order in right at market open. For my broker, I think that will be 5 p.m. New York time today. Just be very careful of the spread. Wait until that drops to a reasonable level. And be sure the price hasn't moved up more than a few pips. I mean, if you miss it, you miss it, right? There will always be other trades, so don't chase it. Okay, let's take a look at the gold setup. I've drawn this ascending triangle on the weekly spot gold chart with the resistance at 1526. I was tempted to draw it down here at 1520 because of these wicks right here and the fact that it could break out over that level this week. But this close right here concerned me. So I went ahead and I put the resistance level at 1526, which is above that close. Now remember I told you about a caveat. Just to make sure we're all on the same page, caveat is Latin for let him beware. So a caveat is a warning, and here's the warning. Look at these volume levels for the last 3 weeks right here. Last week's volume was only 35% of the average. That's another reason I moved the resistance line up to 1526. This week is likely to have a low volume as well. Right now you can see it's not even 20%, and there's only 2 more days in this week. So I didn't want this thing triggering on low volume again. So that's the reason why I moved this up here. But I just want you to be very, very aware of the volume this week on gold, especially if we actually get the trigger this week. But I don't anticipate getting the trigger until next week or later. And here's the trade plan. We will buy a weekly close above the ascending triangle, or above 1526. On the breaking candle, to enter full size position, I want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get that amount, stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say that this pushes up here, candle closes right here. That will be your entry right at the candle close, or just ahead of the candle close. On that day, you want to look at the ATR here, multiply that by 1.5, and measure that distance below the entry for your stop loss. And then measure 1 ATR above the entry for your first target. If after entering the trade, candle closes back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above the ascending triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now those 2 rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on gold. Remember my caveat. This is a huge holiday week that is typified by low volume and high whippiness. Be sure to follow the rule of not taking a trade if you don't get at least 75% of the average volume. Also remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure that you always do the right thing. Feel free to borrow from my list. And today it's Tim's trading maxim number 40. A loss is not a loss, it's a business expense. This is just a small psychological trick. Instead of thinking of a loss as some huge monumental thing, just think of it as an expense in the normal cost of doing business, like the cost of office rent or paying the power bill or the internet bill or the payroll or buying computers or whatever it is that you would spend money on. It's a normal thing. You pay it, you move on. It's no big deal. Yeah, we can complain about the cost of paying the power bill, but we still pay it and move on, right? So that's it. A trade loss is simply the cost of doing business. Remember our daily spot gold trade plan here. We're going to buy a daily candle close above the ascending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And don't forget my caveat about volume this week and early next week. And remember to click the link below to the trade management video for more details. And do sign up for my free Trading Picks email list so you don't miss any of these great picks. I'll send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget to comment below about how you spent your New Year's Eve yesterday. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great New Year's Day, and I'll see you on Friday.